What's up guys, it's Oyisa here and we're back for another video. In this video, I'm going to break down how you calculate your income and expenses on your vending machines. When obviously you start your vending machine business and you start making income, you need to see how much profit you are making and how much is acceptable for you for that specific location. Because at the end of the day, if you put a vending machine at a location, you want it to be profitable. So you need to be tracking your income and expenses to ensure that the location is profitable. And that's through tracking data, tracking this information so that you can make a decision. And just to answer the first question, how long should it take for you to realize it's not a good location? Between 3 to 6 months. If you see that you're not making the desired income you're making, move it to a better location. How much can you expect from a vending machine location? So in my personal experience, I would say you can expect between 1.5, actually let me start from the lowest like limit that I've seen, between 500 and 7,000 Rand, depending on the location. So depending on that range that I've just told you, you've got to have a limit of what you see as acceptable, or at least the minimum acceptable amount. Otherwise, without further ado, let's get into the video. So first things first is the income. What income should you be tracking? So every time you stock up a vending machine, you'll have cash that is paid into the machine for you to earn. So I recommend every week when you go stock up your vending machine, or every second week that you go stock up your vending machine, you take out the amount of cash so that you track how much you've made in that period. So let's say in this specific case, 1 week. After 1 week, you make a certain amount, you track it, you put it in an Excel spreadsheet, and that's how much you've made for the week. But you also got to consider how much you actually came with to stock up the vending machine. So how that works is when you start up, obviously you're not making any income. So that's the first amount of expenses, is how much you buy in stock. Let's say you buy 3,000 Rand worth of stock. That will be the stock that you buy for that specific vending machine. And when you go collect your income, you will take cash and hopefully you won't be buying more stock to put into the vending machine. You'll just be restocking the vending machine. This is why I recommend buying in bulk so that you minimize the amount of expenses that you make, because obviously not only are you buying stock now, you'll be transporting yourself to the place you buy your stock and obviously to the vending machine location. So buy in bulk so that you have to travel to where you buy your stock, let's say once or twice at most, to the wholesalers or to the distributor that provides your stock. So you collect your cash sales, and if you have installed a card reader, you will also start collecting card sales. And for cash sales and card sales, you'll be tracking that every week to see how much you're actually making per week. And do not forget the fact that you have spent an X amount on the stock. So for income, you'll be tracking your cash sales, your card sales, and any money that is actually brought forward from the previous month of income that you made. Put that forward, because you shouldn't be using your business income to pay for your personal luxuries at the beginning of your business. Now we're going to be looking at expenses. The expenses you will accrue when operating your vending machine business is the main one being stock. Stock will be your first expense, and then it will be maintenance. Maintenance being having to buy a spare part for your machine to change on the machine, or calling out a technician to repair your vending machine, or to provide you with something, a service that you cannot do yourself. And this expense is not a monthly expense, but it's one that you'll need to consider throughout your business. Every 3 to 6 months, you do your own service, but you might require the assistance of a technician, but also you may require to buy a spare part for the vending machine that you need to replace. And then another expense that you will need to consider is the card reader services. If you have a card reader, there'll be monthly service fees that you need to pay. Basically, it's like a license fee for you operating a card reader, and it's being paid to the supplier of the card reader, because they basically maintain the licensing for the card reader to be in service and operating on your vending machine. Another expense, this is dependent on how you're operating your business. If you'll be operating it full time, if you'll be paying someone to take you to the vending machine, or you don't have a car yourself, you're borrowing someone else's petrol, something like that, whatever it is, you will need to consider transport and petrol to go to the vending machine. With that being said, you must consider the transporting of stock from the wholesaler or distributor to the vending machine, because that is not free. You've got to consider that factor in your vending machine business. I personally do not account for it much because I still am working a full-time job, and that petrol I use to get to work, I used to buy stock, I used to go to the vending machines. But I try my best to do all of these things at once. For example, if I go to work and I need to buy stock, when I get out of work, I go straight to the wholesaler or distributor. And then from there, I buy the stock. And then from there, I go stock up the vending machine. That way, it becomes less out of my way. It is on the way home anyway. One thing that you will need to ensure you look at is also your vending machine. How much did it cost for you to actually buy a vending machine? Because that is the fixed asset and your investment costs, and you will need to calculate what the return on the investment will be. I recommend that you always take note and track this, because your vending machine should be making at least enough for you to pay off your vending machine no more than 2 years after you actually buy the vending machine. And that's a good calculator to see also if the location is a good location. I'm not saying it should be by the end of 2 years, but within 2 years, you should have paid it off. Sometimes it can be 1 year because the location is that good. But I always recommend that you calculate, for example, if your vending machine was 40,000 Rand, let's say, and you want to see if you're actually paying it off in 2 years, you'll say 40,000 Rand invested for buying the machine, transporting it to the location, buying stock, everything that you have paid to set up the vending machine in the location. And then let's say you make 4,000 Rand net profit every month. That means you'll pay off your vending machine or your investment in 10 months, for example. And that's how you know it's a good location. That's something you will need to always track. And like I said, the benchmark is less than 2 years, you pay your vending machine off. And even better, it would be paying it in less than 1 year. Now, everything I've stated would be relevant for your full financial statement. But now, when you start growing your business, you would like to track how much each vending machine is making you, or how profitable each vending machine is. And the best way to do that is actually tracking the stock to the point and to detail. This way, you say, for example, if you put a Kit Kat in the vending machine and you bought it for 9 Rand and 99 cents, and you buy and you sell it for 15 Rand, you'll see that you're making a 5 Rand and 1 cent profit on that sale. And the cost of the sale is that 9 Rand 99 cents. And if you sell more than 10, for example, you'll be making 5 Rand times 10, which is 50 Rand profit off of 90 Rand and 99 cents of your cost of sales. If you don't understand this, I will break it down a lot better. And if you want to get a spreadsheet of an example of how I calculate how much each vending machine of mine is making, send me an email. I'll send it to you guys for free. And also, if you want to further get involved, you can be part of the mailing list so that you get these things without having to email me every time a newsletter goes out or a monthly email goes out. You guys get it to your inbox. So I think it's best for me to go onto the PC so that you guys get a nice overview of what I've been stating before on the spreadsheet and get a better understanding. So let's go to the PC.
What's up, guys? So as you can see here, I'm using Google Sheets, and this is basically the financial statement for my whole business. We've got the cash sales there. I carry them. That's 2 weeks or 3 weeks plus or 1 week. And I decided after this date to actually separate my machines. This is the card sales, the cash sales, and that's the total income, which is the sum of the cash and card sales. And then we look at the expenses being the stock, which is the most costly expense of the business. Maintenance, there was no maintenance done on this machine other than obviously cleaning it, wiping it down where necessary. And then the card reader, I've got 2 card readers at the moment because the NAIAX servicing fee is around 225 Rand. So that's a total amount. And then that's the sum of all expenses. And at the end, we have the total income minus the total expenses to give us a net profit or net loss, which is a percentage of 65%. And that's basically how I do the whole financial statement for all my vending machines. Going over to individual machines now, you look at this spreadsheet. This is basically my product list for all my products, where I track how many of them sold in that specific month. How I do it or used to do it is fill it up or account for each product weekly, how much has been loaded in the vending machine. And then at the end of the month, I track how much has actually been sold. I used to do that weekly and check what's been loaded, what's been sold. And I still do it weekly, but what I do now, I just keep adding the figures for each time I load stock into the vending machines. And then in the stock sold, I do that usually at the end of the month, because what's basically left over would be a calculation of all the stock that has been loaded subtracted by what's left over, which gives us how much has actually been sold for the whole month. And this is the sales price per unit, how much I sell it for. And those are the total sales. And then that's the cost price, cost per unit, being the cost of the product itself. And then how I calculate it is total sales is calculated with the sales price per unit times the stock sold. And then the cost of the goods sold is the cost price per unit times the stock sold, to give us how much profit was made for that specific product in that specific month. So yeah, that's basically how it works, guys. And I believe this one is very accurate towards a specific machine, especially if you start having two, three, four plus machines. You'll need to track how much you're making per machine to know which machine is actually profitable and which machine isn't profitable. Since I have been increasing and scaling my business, I've needed to do this. And then at the bottom, you will see the total sales and then the total profit for that specific month. And yeah.
Otherwise, guys, I hope you have enjoyed the video. Please like, subscribe, and follow, and let me know what you think in the comments. And yeah, if you're looking to start your own vending machine business, please check the link in the description where you can get a free vending checklist, where it's basically a free checklist and you can start your own vending machine business with the step by step that I have put in. It's basically an overview of how to start and what you need to start your vending machine business. I hope this information was helpful for you to be able to track your income and expenses and understand if your vending machine is profitable and how you know it is profitable, and calculating how you can increase your income or know that the income that you're making at a location is sufficient. Until the next one, I'm out.